Good evening. Ira Epstein of Linn & Associates with your Spider ETF video, and this is for Thursday, and we are at the 10th of September 2020, just getting on to 7 p.m., getting ready for football night. I don't know about you. I don't care who's playing. I want to see some football. I loved it when auto racing came back. I love auto race, especially F1 and all those type of races. Basketball, baseball, at least there's something to do. We're still in lockdowns here. Keep in the back of your mind, Europe is getting a full outbreak again. France, it's getting very serious what's going on there. There are parts of the region where the hospitals are back in the full, almost 100% occupancy. So you're not hearing everything in our news as to what's going on, but it is getting worse. I don't know about you getting the flu shots. I got my flu, my pneumonia shot. My arms are killing me. What can you do? All right. So if you look behind me, it's pretty much a sea of red. The yen was up. The euro was up. My brain was on the euro. And TLT was up. That's pretty much it. Everything else was down. If we take a look at the chart, the big question is, are we going to drop down to fill this gap that I've been talking about that is right here? And it's just above the 110 level. So you're $3 away from it. That could be what the market wants to do. When we take a look at the swing line, you've got lower highs, right? You've already got the lower and low, so the trend is down. Because it's an outside day, which means you took out the previous day's high and low and you closed lower, if you take out today's high, I would call that a bear trap. And then I look for the market to rally, generally back to the most important number being the closest moving average. And in this case, it would be the 18-day average. If it doesn't take that out and wants to break, potential support might be 104.67, but more important is the lower Bollinger Band, which is in that gap area at 110.84. So I wouldn't be surprised if that's the number. I'm not saying it has to go down there, but right now everything's pointing to that. When we take a look at slow stochastics, here's the OIN. You've oversold. Oversold is something that you've got to keep just as important as a trend. Oversold means you may run out of sellers down here. Certainly if you got to that Bollinger Band, I'm thinking that that'll be a pretty strong support zone. In SMH, oversold, trend down. And that trend turned down here and in XLK because you had outside days to the downside, which means the swing line, the way that I created it, should be down unless you take out tomorrow this high. If you don't take it out tomorrow, even though you can have a bear trap by Monday getting over that number, the swing line will set itself without getting it, that lower highs, lower lows. That much I can tell you. Where's the support? 164.10. I don't see reasons to be long at all. And I'm looking just for the Bollinger Band in an oversold market to offer some support there. XLI turned back into a downtrend. Again, we have a market dropping away. Any reading under 30 in the slow stochastics is oversold. So it's an oversold market in a downtrend, fighting a battle against the 18-day average in sideways Bollinger Bands. We call that a pipe. And what the market's now trying to do is whip itself up in here. If it's going to follow through, I look for support at 75.64. If the market wants to just whip traders around, it'll take out 78.20 and confuse everybody. That's what that's how I'm analyzing it. The energy sector, I'm just super bearish on. To me, this length of what I call a pipe, that sideways action of the Bollinger Bands, and now that you're pushing it to the downside and widening it out, that's an awful lot of resistance over the market. I don't see anything to make it get through there, and I see the trend is down, the bias is down, and I have that embedded reading. That to me is the strongest tool I have. So I still remain very much in the bear camp. In the NASDAQ, oversold, again with an outside day down today. So lower highs, lower lows bearish. EFA, the emerging markets, outside day down. Another setup for bearish. Now, with all these outside days, tomorrow or Monday, if you take them out, you get a different look to the picture completely of what these charts are going to look like. Until they're taken out, they're fully in play. And they're screaming bearish, not bullish, but I don't like the oversold part of the market. The gold market doesn't know what it wants to do when it grows up. To me, it's just going sideways, consolidating at this point. The battlegrounds, the 18-day average of closes, now you're developing a pipe for this market. We'll see what it does with that, but that's what I see going on in it. The GDX gold miners, you know what I would tell you, today's high 42.89, you just missed the upper Bollinger Band. What's the chart pattern? You have a lower low and a higher high. You're not in a trend, and you're very much just trading sideways right here. TLT. This market got a reversal today. The pattern, though, has been bearish. Lower highs, lower lows. You settled back over the 18-day average, so it sort of negates that bearishness. Even if you took out 165.26, you can break the pattern of lower highs, lower lows, but you can't create a bull pattern. So at this point, momentum flat, bias up, swing line down. In the euro, I warned traders. You know, one of the things that I bring to the table for you is I've been doing this since 1969. So I learned charting from some of the greatest out there, really put my effort into it. So I'm 50 years in this industry. And you learn the rules of the game. You know, I get questions from people writing me on YouTube, or they'll send me emails, and I do respond to just about everything. And they'll say to me, did algorithms change the game? Not really. You just adjust to them. It's no different than when a report came out in the old days, and then you'd go to the opening and prices were crazy. Everybody's screaming. I was one of those guys. I have tinnitus, it's called, from standing in the pits for years, where everybody's screaming in your ear and your hearing goes. Like being, I wish I could say a rock star. I think I would have had a lot more fun, but that's what it's like. And you just adjust. And in that adjustment, when you get an important bank announcement with a news conference, which they do, Ms. Lagarde did this year, head of the European Central Bank, and you're trying to trade what that's going to mean, don't. All you could do is get yourself in trouble. Let the other boys trade it. Sometimes it's over in 10 minutes. Other times it's the whole day. Today happened to be an all day. If you were watching intraday charts, you saw the market start to roll. And once it was rolling, something happened. It gave up that 119 level and just started slipping back. Are we trending? We're not. You've got a lower low and a higher high. You're just sort of drifting right here. So I put it all together, try to come up with a game plan for you, and in part of it, what we have is our guide to technical indicators, volumes 1 and 2. If you want to learn stochastics, want to learn moving averages, more about the Arun indicator, time and price relationships, spreads, backwardation, what's going forward on you, which way is the market telling you? Well, these are all popular ways to learn. Each of the brochures, and they'll come to you and you can print them out on your printer, are about 20 pages long in full color. I highly recommend them. They're free. So just go to our website. You'll see the free offerings form, and away you go. The free offerings is the bottom part of the website, or you can call us. We will return the call and get everything to you. I'm Ira. Let's watch some football, and I'll see you tomorrow.